Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with good friend of the channel and content creator for the amazing course, How to Get Started One Rental at a Time, Todd Baldwin. How you doing, sir?
I'm doing great. Thanks for having me.
I'm starting to get used to look at the camera instead of my computer, but I got to get better. Anyways.
We'll forgive you.
Yeah, hey, I do what I can. I try to get better every day. Anyways, what I wanted to talk about here was how we ended video one. In the end of video one, we talked about how high the 30-year mortgage might go. And I believe that anchors on the Federal Reserve, Jerome Powell and his cronies. So let's first talk about the Fed, then we'll get to where I think the 30-year goes. And I'd love your opinion as well. So I don't know if you heard, because you were out partying for your wife's birthday. Again, happy birthday. And the Fed got ultra hawkish. The second in charge, Linaire Bernard, I think her name is. If I'm mispronouncing it, I apologize. She was the biggest dove of everyone. She was going to be the counter to Powell, semi-hawkish. She now, as of a speech on Wednesday of this week, came out as not a hawk. She came out as a velociraptor. She's basically saying things like the inflation is so bad, it's almost like being unemployed. It is hurting the poor that much.
Wow.
And she says the Fed only has one tool, and that is to raise the Fed funds rate and basically get ready. And then that's where you saw the 10-year, man. The 10-year spiked to over 2.7. All my mortgage guys are texting me daily going, oh my God, I can't believe how bad it is. And that's where we had the 30-year go over 5%. So the first question for you is, do you believe the Fed? Because I get a surprising number of comments from folks that say, Michael, you're an idiot. You don't understand. The Fed can't do it. The Fed won't do it. They don't have a backbone. They only want to talk. You're falling for their nonsense. I thought you were smarter than that. They're not going to do it. Where do you come down on all this?
Well, I agree that I don't always believe what the Fed says, but they're not wrong that inflation is killing the most vulnerable Americans, and something has to change. I mean, these, gas prices, the price of bread, like everything, our poorest people are getting really, really hurt. And if one of the ways to combat that, I mean, if they just give out more stimulus checks, it's just going to create more inflation. So they could do that, but that would be a terrible idea. And any economist worth their salt would agree that's a terrible idea. So although, yes, I'm not inclined to believe what the Fed says, logically speaking, raising interest rates is a factor that could bring down inflation.
Yeah, it is, in fact, the only thing that's been proven to bring down inflation. You have to create demand destruction. And the Fed has a lot of tools, but they're very focused tools, right? So again, they are going to change the overnight lending, which is what the Fed rate is. That's all they can do. Now, because they have a $9 trillion balance sheet, we'll get to in a minute, they can also play with the back end, which is a nice wrinkle that I still don't think people realize. So a couple of things to all of those naysayers out there. First and foremost, I've been studying these guys for 30 years, and I don't believe anything they say on the surface. I do believe every Fed chair has a strategy. And once you figure out their strategy, they're easy to predict. Greenspan, he was going to say lots of nothing. And if you thought you knew what he meant, you were clearly confused. He was the master of what they call Fed speak. Bernanke was the dance partner. He would tell Wall Street what is coming and then deliver. Paul Volcker, he was, I'm in charge, you're not. I'm going to surprise you every chance I get. Hence, Fed rate changes on the weekend. So Powell, what is he going to be? I had hoped he was going to be more Volcker. Wasn't really thinking he would, but that was a hope. He kicked that out the window when he only raised a quarter in March. That was a weak move, which they now have admitted was weak, which I thought was cool. But he is clearly of the ilk that we're going to tell Wall Street what's coming and then deliver. And until proven otherwise, that's the strategy you have to take. Because if you don't, you're betting your downside is huge and your upside is so limited, right? Look at the stock market today, Todd. It's the NASDAQ, or I think it's the S&P, is like 7% off its peak. So that's your upside by the dip crowd, 7%. I've lived through a downside of 80%. So even if it's not crazy, it's 50%. You really want to do that risk reward ratio? And there are a lot of buy the dip fans that are very vocal. I think your risk reward ratio is out of whack. And all you got to do is wait till May to see which ilk you're on. I know there's a very famous YouTuber out there, Meet Kevin, we'll just say his name. He's calling for a quarter. I think he is way off. He is not reading this correctly. I think you'll have 2 50 basis point raises. And I said that before all of this nonsense. So what do you think? Yeah, I agree with you wholeheartedly. And I apologize if I accidentally coughed in the microphone. I feel like I'm getting a tickle in my throat, but it's probably because I'm so upset about interest rates. Anyway, yeah, I agree with you. You know, just like politicians will say things to buy votes, YouTubers say things to get clicks. And it doesn't necessarily mean it's true. It means that's what's going to get people buzzing and talking about it. So take caution when you heed advice from people online who have an objective of getting you to click on their video. Yeah. Yeah. No worries. So let's talk about rates. So you asked me, I'll go first, and then we'll go to you. So so we're gonna frame this right. 30-year money, owner OC, best credit, kind of the rate that you see quoted all the time. Last I checked, the average was 5.02%, so above 5. Where is it going to be in December? I think the real question is it over under 6? I believe, man. Yeah, I think it's going to be over 6. I think it's between 6 and 6.25. And again, I would not have said this in December. I think I said in my December video 5.9. So I was close to 6, but not 6. I now think it's over 6. It might even be 6.25. Yeah, that's where I think we're going. How about you? I agree. I mean, if the inflation rate could have been, 7% like it was a couple of weeks ago, I see no reason why interest rates couldn't be raised to 6. I don't think it would go higher than 6, but I don't know. But yeah, I think 6% interest rates is very realistic. And we did a video a while back where we talked about at what point would guys like us stop borrowing money? Yeah. And I think, if I remember correctly, I think it was right around 6%, where we would just pay cash instead of paying 6 points. So, we're in a privileged position to be able to do that. Most people can't just pay cash for a home, but yeah, I see if it goes to 6%, I think people are going to be struggling, but I agree with you wholeheartedly that people are going to be staying put. That's the key. I don't know. See, I don't know that they're struggling. Right. So let's just play this out. Bango, bango. May 1st, 3 weeks from now, the 30-year mortgage is 6%. People say they're struggling. Again, if you already own a home and you do what I talk about, get 30-year money, you don't freaking care. You don't care. You don't care. If you happen to be in a situation where you have to sell, death, divorce, move, something like, you probably care because your buyer pool is not as big. However, if I am right and we have supply destruction, or as Bank of America and Yahoo Finance call it, the interest rate trap, I want you to envision this. Let's call it February 1st, 2022. We had a supply pool of 1 million homes listed. Arguably, we had a demand pool of 3 or 4 million. That's why you would see lines out the door. You would see 10 offers in a week. The demand supply picture was wacko. Right? I'm outlining the picture correctly, right? So now let's fast forward. It's May 1st, 3 weeks from now. Interest rates are 6%. Remember, it was 1 million and 4 million. Now maybe we're going to be 600,000 and 2.2 million. We still have a wacky supply demand picture. Maybe it's not 20 offers, but all you need is 1, and you probably have 3. I don't see good news for, first-time home buyers, because even if you take half the inventory out, and you take out half the demand, your demand supply is still horribly imbalanced, don't you think?
I do. I agree with you completely. And this is why I love talking to you, man. You're quite knowledgeable in all this stuff. I've got a question for you, a scenario. So let's say you have a retiree. Let's say they're 70 years old.
Yep.
They bought their house a bajillion years ago for 80 grand, right? Yep. They live in a nice city. That house is now worth, let's say, $1.2 million.
Sure.
They, at 70 years old, don't need all the space. They maybe want to cash out and go rent something, a 2-bedroom, 1-bathroom place, right? Mm-hmm. Do you think that if interest rates go to 6%, that retiree would have a hard time selling their $1.2 million home for $1.2 million?
Yeah. So this is a scenario I've been playing with, and I actually did a spreadsheet. We may make this video number 3. It's called supply destruction. So if that 70-year-old in this example has their home paid off because they did not use it as an ATM machine, they will likely sell their home, but they'll sell it for 900 grand because they don't care, right? 900 grand to them at 70 years old is basically the same. And they might end up selling it to an investor, right, who's going to take the margin and just hold on for the rates to come down or whatever. If they did use their home as an ATM and they're sitting on an $800K mortgage, they're not going anywhere because they need 1.1 or 1.05 because they need that extra money to live the rest of their years. So it's really going to come down to that person. Did they use the house as an ATM or not? Because again, if you want to sell your 1.1 that you own free and clear and move to Florida, you don't really care if you got 1.1 or 900. It's all gravy to you. You're envisioning you've got 10 or 15 years left. You're going to ball out. It doesn't matter.
Got it.
And that's what I think is coming. I am going to be fishing for that move up market because again, I only buy great deals. The beauty of how to get started one rental at a time is I know average and I only buy great deals. I only write great offers. It's been remarkably hard to get any deals the last 2 years. It is going to get a lot easier because I'll write lots of offers and I'll find that 70-year-old who wants to go to Florida, and I'll be his only option. I'm not going to pay 1.1 in this scenario, but I'll pay 900.
Right. Well, then, and what's your exit strategy though? If you're going to pay $900,000 for a house at 6% interest, I mean, are you paying cash for that? Are you financing that and selling it later, or what's the deal?
Well, I don't know. Again, right. In my world, they would have to cash flow day one. So again, interest rate doesn't matter to me. I hope interest rates go to 10% because all I do is change one column on my spreadsheet, which is cost of capital. I only do great deals, which is the highest cash on cash. So if I'm paying 10%, I'm going to want 15 or 16% yield. I give a rat's ass what the interest rate is. That's the difference between an investor and a homeowner, right? If a 6% interest in this example makes that 900 grand an alligator, I don't buy the deal.
Right.
See, this is the example, right? Back to that example, I was assuming I could cash flow at day one. In this example, let's say at 900, it breaks even. Well, Todd, I don't write a break even deal. I don't care. I don't bet on appreciation. I don't do wedge deals because wedge deals are fictitious, right? They're opinions at best, but I will write an offer at 750 because then it'll cash flow. And then I can hold on and wait for the Fed to cut rates in 5 years, refi and live like a king.
There you go.
That's how I do it every time.
Hell yeah. Awesome. Good man.
There you go. Hey man, where can people find you?
If you want to follow me on Instagram, check out at Todd J. Baldwin.
Awesome, buddy.